Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dobi. Foundational planning question. We're dealing with it every day here at North Main Financial Group. Is dealing with clients who are approaching retirement. So I'm segmenting the folks who are not yet in retirement, who are approaching retirement, let's say within the next 5 years. So relatively short time frame in terms of looking at things. What are the kinds of things that we encourage folks to keep in mind relative to that planning process as they can see the finish line and they're starting to put finishing touches on a career and thinking about what retirement looks like. First thing that we encourage folks to think of when it comes to retirement, think of retirement not as a finish line, but as a mile marker. And you may be saying, well, that seems to be, a little bit too diverse in terms of a thought process there. I get it. We're not trying to split the hair, if you will, but rather encouraging folks to think about retirement, yes, as far as your professional life is concerned, maybe a finish line, but in terms of your financial life, it really is just a mile marker, because we anticipate as folks retire that they are going to be in retirement not just for months and years, but for decades. And so in thinking about that, you want to make sure that from an anticipation standpoint, certainly from a planning standpoint, that you're thinking about it in terms of decades so that you plan well for what happens throughout retirement, which brings me to the second idea relative to approaching retirement. Think in the long term. And that specifically speaks to your asset allocation inside of your portfolio. I'll put it differently. Putting all of your money in the proverbial coffee can may feel good on day one. Certainly it'll feel good whenever the markets pull back, but it's not going to feel all that good as you get 10, 15, 20 years into retirement. And the reason for that is because obviously with inflation, the power of the dollar or the buying power of the dollar decreases over time. Meaning having your $1,000 today is not going to be that same $1,000 in terms of purchasing power as we get 10, 15 years, 20 years down the road. So you want to make sure that that capital is working for you. Like I said, it's a mile marker, not a finish line when you hit retirement. So you want to make sure that that money is working for you throughout the balance of retirement, and it's different for everybody. Which brings me to the third point. Relative to your plan, make sure it's financially flexible. If you are spending to the absolute max of what your assets and income allow, folks, when we hit a downturn in the market, it's going to feel really unpleasant. Now, I also need to say nobody likes a downturn in the market, but if you're financially flexible, you know you're going to be able to live through that time and it's not going to be a big deal. You have enough in cash reserve, you have enough in things that don't go down when the markets pull back. You're diversified into different types of assets so that you're not feeling that sting of the market downturn in a moment. And that's very, very important, because if you are living right to the max of what your ability is to spend in retirement, that's going to have a significant impact, especially if you're taking a draw off of a portfolio which has a significant downturn as the markets downturn. Very, very important concept to keep in mind. If you'd like to reach out to us at North Main Financial Group, talk about what it means to approach retirement. It's different. It certainly isn't anything like what you've done during your working years. What does it mean not only on that day, but in month one, year one, decade one, as you're in retirement? What kind of planning ideas should you keep in mind? How do you prudently do it so that you remain financially flexible? We'd love to hear from you. NorthMainFinancial.com.